The challenge with many of you when it comes to your finances is you're too fragmented. Where you concentrate is where you're going to get results. When it comes to where you should be doing your banking and your borrowing, it's very important to try to concentrate as much of your resources, especially when you're not starting out with a lot. When it comes to resources or financial education, it's very important to concentrate as much as you can. With that having been the case, what platforms are most advantageous for you when it comes to your finances? So we're talking credit unions, big to mid-sized banks, or fintechs. The difference between the three business models is very important when it comes to your finances, because you as a bankable client and a borrower are going to have your strong suits, and they're going to fit each one of these business models differently. That means you can get phenomenal service and growth from some of these institutions. If you go to the right ones, then you can end up having a really terrible experience if you go to the wrong ones. When it comes to credit unions, obviously they are relationship centered. You can't even borrow from them in many cases unless you have a relationship established. In order to have membership, you usually have to have some kind of relationship. Most of the time it's a savings account. You're going to understand at this point in time, in order to get the maximum out of them for borrowing, take advantage of the great rates and diverse products that they usually offer, that you're going to have a very centered, strong relationship with them. That having been said, when you think about big banks and upper mid-sized banks, they're great in their own way as well. They have the technology and the infrastructure to give you an experience on the lending side without necessarily having a strong deposit relationship. American Express is a very good example of this. I can firsthand attest to getting tens of thousands of dollars in credit limits from American Express without having much of a deposit relationship at all. I'm just being transparent. I love Amex, and I plan on making them one of my primary focuses for 2024, but I don't have a lot of money with them, and I still have tens of thousands of dollars in available credit with other offers waiting in the background. Chase Bank is very similar, even though I would say that they are very relationship focused as well. But Chase Bank's another institution. If you have strong credit and other financials, you can go in and get some high credit limits, access to capital, and some other benefits without necessarily having the strongest deposit relationship. Fintechs, for many of you, this is the hype train. I'm going to be honest with you. Fintechs have a long way to go. Long way to go. Many of you who are excited about this idea that traditional banking is dying and that fintechs are on the rise, got a long way to go. Many fintechs are getting their asses bust right now in this economy, and I'm just being frank. I've banked with them, I've dealt with them, and yes, they offer some nice premium perks, great deposit rates, creative products, creative lending, and that's great. I think in the future that's going to be very helpful. But many of these fintechs don't have their feet and their legs underneath them at this time. And it sucks to put your money on a platform that you don't even know if it's going to be there tomorrow, and your money gets tied up or accounts get closed abruptly. I just had it with M1 Finance. Those of you who are banking with M1 Finance, they made some changes. I didn't have a lot going on with them at the time. I used to have a pretty sizable stock portfolio with them, but I ended up moving that over. They ended up forcing me to close my checking account because of changes that they're making, along with the fact that I didn't have a strong relationship with them. And it was relatively abrupt. Thankfully, it wasn't much money. It wasn't a big deal, but it could have been. These fintechs have a long way to go. They're great for alternative lending, and they're great if you have chunks of money to put up for high interest rates with low stipulations. So there's a place for all of them. But I can tell you right now that you want to do as much of your banking and your borrowing from one place until you get enough resources and financial education to expand out. This is how you maximize your earnings. This is how you maximize the cost of borrowing, a lower cost of borrowing. Because the more you do with one institution, the more they're going to trust you, the more they're going to offer you. That's typically how that goes. Now, once you graduate out, if you have the resources and the financial education, then yes, expand. Build out several relationships, because you want diversification in the end, because all of these institutions specialize in something different. So it's very important to understand many of you are too fragmented. Even some of you who are more skilled or knowledgeable with your finances, you're still too fragmented. You got checking accounts over here, savings over there, you're borrowing over here, you get credit cards over there. Max out an ecosystem at a time on average. If there's a great opportunity on one particular product or service, then I understand that. But generally speaking, you want to do your best to max out one institution at a time, because you're going to get so much more out of that relationship. Comment down below and let me know what institutions you have the strongest relationships with and what benefits you've seen from that. Other than that, to all my pioneers, welcome back. To my new viewers, welcome in. Want to learn more about myself and the channel? Start in the description section and work your way to the about section on the channel. And I want y'all to stay focused, stay in motion. I'll see y'all soon.